You get into the first vertical for $2. Then I'm waiting to sell the credit spread. Price just won't get there. Profit stalls. Okay. The question is, would it be worth it to sell the credit spread for $20 loss, or should you just get out and move on? Yeah. So we talked about this on Saturday actually for quite a bit. JCM, exactly your question. So it's something that you've got. That's something you're going to have to figure out what your exit strategy is going to be. So one of the things that we talked about with exits on Saturday is if you get into the trade here and you're going to get the 50, whatever it is, the 55, 60s, and you're going to try to get the 60, 65s, whatever, right? You must have in your mind, well, if the trade doesn't work, where do I get out? At what point do I just close it? Or at what point do I take a credit spread for a loss? So you have to, or at what level do I just take whatever loss there is? I just close it. So you have to predetermine that when you take the trade. So if you look at this, you're going to say, you know what? If it breaks through this level of support here, I don't think I want to stay in the trade. Your question is, if I close the trade, let's just say I'm only going to lose $10 because I'm going to get out kind of where I got in. Do I do that? Or do I spend, say, $20 or $30 as a loss to add the credit spread? So which one should I do? This closes it all together. This one I end up with a fly, right? That's the question, right? Yeah. So it's up to you. If you've had several shifts throughout the day that have not worked out, and you're down a bit and you really can't, doing two contracts or whatever it is, and maybe you don't want to take additional loss of, let's say you had 3 to convert. This could cost you close to $100 more if you were to get the flies. If you do it this way, it's only $30. So maybe you just get out of the trade, reassess, get back in, or get back in this way, depending, right? So I always think you want to err on the side of, let me at least get the fly, right? The fly is a no-brainer. But at some point, it doesn't make sense. Another part of this, which I think is pretty important to recognize, did you sell any debit spreads? Because if you did, let's just say it did this, and let's say I was doing 6 contracts. I sold 3 debit spreads at $40 each. So I've got, over the mouse pad again. So I've got $120 and profit, and I got 3 debit spreads to convert. Now price starts to move down on me, right? It breaks this level, and now it's like less than 10. I'll lose $10, which means I'll lose 30 against the 120. If I bail out completely, then I'll have made $90, but I got no flies. So does it make sense for me maybe to convert a couple of them, maybe convert 2 of them, even if I'm going to lose, $30 or something? Maybe, right? So maybe I should convert 2 of them with a $30 loss. I'll lose $60. I'll have a fly and still have 1 debit spread left. So maybe I wait a little bit. Maybe it comes back. If it doesn't, all right, you know what? I'll dump it for $40 loss. But I'm still up by 60. So you can see that it really depends, and this is why I'm such a big promoter of buy the debit spreads and sell, a third to a half of them maybe even more, but somewhere between a third and half first, as quickly as possible. Because unless you are absolutely wrong on the shift, you should have something going on before it reverses. Very infrequently, unless you just don't get it. And after 30, 40, 50 trades on paper, I would think you would get it. I think most of you would agree that if you get everything you want, pull back, test, retest, yes, I'm getting the trade right here. I got this, I got this, I got this, and I got this. I got everything I need right here. I'm going to go ahead and get the 55 60s. Bang. I think most of you would agree that it's very unlikely that price automatically, the next candle goes like this. When you've got everything moving, especially a little pullback hold, so you have like a double support level here, very infrequently will it just start reversing and do this on you right there. Typically what happens is it follows through with the move. Now it can reverse eventually, but this first little move right after you take the trade is where you should be looking to sell some debit spreads. That's why in Perfect Practice 1, I have you do what? Buy a debit spread and then sell it for $30 to $40. Boom, boom, sell it. I want you to get good at two things. Well, more than two. I want you to get good at spotting the shift. I want you to be patient and get a really good entry with additional support or resistance if you're trading it the other way. Really patient entry, or we call elegant entry. Execute the trade properly and then sell it for a profit. This is very important that you do this in phase 1, because later on, when you're doing credit spreads, don't you see how much of a benefit it is? Even if I was only doing 2 debit spreads, if I sell one of them for $40 and the market starts to turn on me, and now I've got to get a credit spread, but it's going to cost me an extra $30. I can't get a better credit. I can't even get it at break even. I'm going to lose 30 putting that credit spread on. It's okay because you're already up 40. You end up with $10 and a butterfly. Does that make sense? You guys get this? Yeah, I mean, you do want to get the fly. More importantly than getting the fly is getting the shift, JCM. Getting the shift, following the rules of entry and getting a good entry, sell the debit spreads, and that will give you the cushion to get the fly with the least amount of stress. You guys have seen me trade live in the room. I do it every time. I'm always selling some debit spreads to bring in some cash. Then I use that cash if I need it to get the credit spreads. Yeah, it's not candles, Jeff, that you need to close the credit spread for a profit. It's points. So if you got the entry, when you say, okay, I'm ready to get this trade, and you look to your right, and you are $1.50 out of the money. You always want to be slightly out of the money on your debit spread purchase. So if price is at 66, 48, 50, you want to get the 50s. If price is at 66, 54, 66, 54, 50, 66, 53, 50, you want to get the 66, 55s. You want to get just out of the money, right? So I want you to look at it. I'll draw it and be easier. Price action. Boom, boom. There you go. That's your holy shift moment, okay? That's what you want. This was the major shift. You waited for a pullback. Potentially, maybe there was the 20-period moving average here or something, right? And there's where you got it. You don't want to do more contracts until you've completed phase 1, phase 2, phase 3. Don't rush this.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.